Well, good evening, everybody. Thank you for joining this webinar on Bitcoin and cryptocurrency. We're from BCS Berkshire branch that does most of its activities in Reading. Our website is berkshire.bcs.org.uk. Now, I encourage you to go there and look at events that will be running face-to-face when we're able to do so. But at the moment, of course, we're doing what we do online, as are other groups in BCS. It's my privilege to introduce this webinar. I'm the communications manager for BCS Berkshire. I have with me Andrew Fieldsend, who will be looking after the Q&A. I'm going to have to drop off after a while for another meeting, and Andrew will look after you throughout the event. And we have Anthony Parker, who has for the last few years been chairman of BCS Berkshire, and he will be talking as the founder of a company called Route 64, which he will explain. So it's my great pleasure, without further ado, to introduce Anthony for tonight's talk. I hope you enjoy. Bye-bye. Anthony, I think you're muted. Can everybody hear Anthony? Because I can't.
At the moment,
No.
Anthony.
Okay, I can't hear Anthony.
No, likewise.
So
It was working so well.
Oh, there
now
you
we
go.
can hear you,
You can
Anthony.
hear you now.
Okay.
Yeah, can you hear now?
Yeah.
Okay,
Right.
so as I say,
Let's-
it's my great pleasure to introduce Anthony to speak on cryptocurrency to you.
Can you still hear me? No?
Yes, we can hear you now, Anthony.
Excellent. So let's do a couple of, just set up issues here. Okay. Well, thank you very much, guys. Thank you very much for joining us, and thank you very much to BCS Berkshire Branch in giving me the opportunity to talk on this subject. It's great to have so many of you on. I can see a couple of names that I recognized, so welcome. It's great to have you all along. So I'm Anthony Parker. I kind of run Route 64, which we're kind of primarily strategic specialists. We give advice around collaboration, engagement, and blockchain. We try to make these large concepts in blockchain and cryptocurrencies as easy to understand as 2 + 2. So I'm going to try and keep this rather informal. So feel free to kind of speak up as we go through the presentation, or drop any kind of questions in the chat or as questions, and we'll pick those up as we go through. I'm not a financial advisor. Nothing that I say in this presentation is financial advice. Although maybe you've got to be aware of some financial advisors that really have no understanding of the cryptocurrency space. And that will become more prevalent as we kind of talk through this presentation. So, does anybody know where this picture comes from? Would anyone like to hazard a guess? So, some of you may kind of highlighted that it is indeed the Matrix. And one of the reasons why I put this slide up is that once you actually start to understand a little bit about Bitcoin, its history, cryptocurrencies, and the underpinning technology, which is blockchain, you start to kind of run into some very, very interesting concepts and topics, and they are quite large concepts to sometimes get to grips with. So in lieu of this slide, after this, really, there's no turning back. You either take the blue pill and the story ends and you wake up in your bed and believe whatever you want to believe. But if you take the red pill and some of the stuff maybe in this presentation, you stay in Wonderland, and I can show you how deep the rabbit hole goes. And in this industry, cryptocurrency, once you start to have a look at it and understand and research a bit more about it, it's really like going down the rabbit hole and kind of understanding all the different concepts. There's a lot of knowledge, multiple layers, but really it's all about kind of freedom and the brutal truths of reality as far as the red pill is concerned. Now, I got into cryptocurrency around about 2016, and I really saw Bitcoin primarily as a way of diversifying my investments to start off with. And I was just playing around with what was interesting and a peculiar technology. But in 2017, a lot happened with cryptocurrencies. They raised in price quite dramatically. And I ended up actually leaving a job at BT as a director of customer experience and looking at blockchain and cryptocurrency full time. I set up my company Route 64 to look at this and other areas like collaboration and engagement, but it was blockchain and cryptocurrencies that really kind of brought me back, and I was fascinated with this subject area. So why is it so fascinating? And I think one of the first places we've got to kind of discuss in this area is what is money and the evolution of money. So you can see that over time, money has evolved through generations and society. It all started off with bartering, where you had people that had goods and products, and they wanted to actually barter for other different products and services that they couldn't actually get hold of. And it was a case of, 2 chickens might equal a sheep. But, bartering, it was very difficult to understand the inherent value of your cow or your sheep compared with 2 chickens. And then we had kind of gold, which was a kind of a precious commodity that people realized was valuable because it was shiny and it could be used and it could be molded into any other type of any type of kind of jewelry. But it was also a kind of fundamental store of value. And so then you had gold, which allowed the value of what you actually wanted to give and what you wanted to accept. And gold was the underlying money unit. Then became retail coins, which was kind of gold coins. And of course you had, pences and pounds in coins that were actually minted by the government. That moved more into paper money, which was a representation of gold and a representation of that money. And then we gradually moved into plastic cards, and we started to look at electronic money and moving into cryptocurrency. And as we can see, as we evolve through many of these stages, the world GDP over the last 2 millennia is increasing exponentially. And it's going from, commodity monies and coins, around 1 AD to paper money around 1100 AD to 1500 AD to plastic money in only 1958. And now we get onto cryptocurrencies that started its life in 2009. But there are various different kind of functions and characteristics of money. You've got the medium of exchange, which means it's actually used to exchange, your goods and services. It's an underlying value. It just helps you transfer value from one person to another, and you both understand the actual value that is being traded. Money is also a store of value. So, gold is collected by a lot of people to store their investments. And money can be a unit of account. So everything in the shops is now, British pounds. Now, when we come to Bitcoin, it might not be a unit of account yet for a lot of people. Not everybody is putting goods on products and shelves and marking it in Bitcoin. But Bitcoin is definitely a medium of exchange and a store of value, as we'll discuss later. But there's other characteristics of currency. The fact that it should be durable, it should be portable and divisible. And some of these are actual trade-offs. So paper money, it's not as durable as gold, but it's far more portable than gold. Both are divisible, but you can't cut a note up and have half the money, but you can actually cut, you know, a gold bar up. You should have uniformity, so a small ounce piece of gold should be equal to another person's ounce of gold in another country. So it should have uniformity across geographical regions. It should be widely acceptable by many different people within the industry. And it should have a limited supply. And with gold, we see that it does have a limited supply, but that supply is growing every day with gold mining. But let's think about money in the kind of the wider sense. You may think about the current environment as treasuries are bailing out businesses during the COVID crisis. And this isn't the first time that this has actually happened. In fact, one of the first times that this has actually happened is in Rome, 33 AD, where Emperor Tiberius bailed out businesses with treasury money. And after that, the Roman coins and the Roman unit of account started to be inflated away. And that actual currency was no longer the actual standard across the world. And let's think of other things that might be considered as money. We see children in playgrounds that maybe use Pokemon cards, conkers, or sweets as actual currency. So again, it goes back to the view that it's just a way of exchanging value. And money doesn't really originate from banks as much as we would like to believe. Currently, banks do actually print money in the form of mortgages and other loans, but it doesn't originate from banks. It originates from markets, really, to transfer that value that we've mentioned. Using a coin is really kind of a centralized solution to bartering. But then in history has told us that kings start debasing coins with other metals like tungsten. Paper is easily transferred by a promise note that you'll pay the value, and it was originally backed by gold. But in 1971, Nixon took the US dollar off the gold standard, and that meant that paper money and the money that the government prints was no longer backed by any tangible asset. There were wars financed by government bonds. That has happened in many different countries, and a way of actually ensuring that the amount of money spent on wars was actually financed through the bond markets. And we know that fiat money, which is basically your local currency money, is really debased each year by printing. We take for granted that we are losing 2% a year on all our kind of fiat currency. In the 104 years the US dollar has been around, it's really lost 98% of its value. You know, you could have, in 1970s, you could be a businessman who had a job for life with a nice house paid off, a car, a wife with 2.4 children. But these days, it's really difficult, even maybe to cover rent with the current money that we see, because it has been inflated away. So we are losing trust in banks. You only have to think about PPI, credit default swaps in the mortgage market that had that made the financial industry downturn in 2008. And when we come to cryptocurrencies, there are a lot of people that do not believe in them and think they're a scam and think they're a hoax or a Ponzi scheme. And a lot of these same arguments were put to the internet. And when the internet was around and it was just TCP/IP and a few web pages, people said, this is not going to work. This is not going to work for video. This is not going to work for communication. But look at how far we've come with the internet. With crypto, it's a little bit like the car being taken over from horses back in the day, back in the early 1900s, where horse riders and people that looked after horses thought that the car was very dirty and it would never stand up to the rugged terrain that horses had to go through. Why would you ever want a polluting car that only went 5 miles an hour and you had to have a man standing with a red flag at the front of your car? You know, horses were far more efficient. But, you know, progress and innovation has shown us that once we actually put the roads down that helps cars, it actually does benefit the horses as well, and everybody benefits. And so when people write off cryptocurrency, they fail to understand how we kind of move on technologically and really update some of the areas for the next generation. We only have to think that, you know, digital payments is probably our future. So, I mean, there's many different types of money out there. You know, you can have central bank digital currency, that is currency printed by central banks. There's cash, which is printed by the treasury of the government, but that cash is only a very small percentage of the actual cash out there. There's bank money. Now that is in the form of loans and mortgages. So every time you go for a mortgage and a loan at a bank, they will create this money out of thin air. They would create it digitally and have the amount. Let's say you borrowed £10,000. The bank would record £10,000 on their assets and £10,000 on their liability. The liability was because you needed to pay them the £10,000 back. But they could actually take the £10,000 and use it on other money markets, making a lot more interest than you are paying. And that is called fractional reserve lending. And that is basically every single mortgage and loan that banks actually offer. Now, when you actually have people that pay their mortgage off or default on their mortgage, then the banks have to write off this money in the economy. So not only do they have to write off it on their liability side of their balance sheet, but they have to write it off on their asset side of their balance sheet. And this means that the economy shrinks if this happens. So actually banks need to create more and more debt to really propel the economy. And we're really seeing this play out currently with COVID, where more and more money is printed to really prop up some of the stock markets and some of the banks that are finding a solvency crisis in today's area. So we have bank money, fractional reserves, cryptocurrency we've kind of mentioned, but we'll go into a bit more detail in a minute. Commodity money, so this is money based on an underlying commodity like gold. Mobile money, so this is what you have in like PayPal and Venmo. It's digital kind of mobile money, but can be transferred to actually real money. And platform tokens, and we'll talk about tokens later. But you can see there are plenty of different types of money, whether it's centrally bank issued, peer-to-peer, electronic, or universally acceptable. And we've got to take this into account when we think about money. But let's go into a bit more detail about Bitcoin. And this is a slide that I pulled together that just discusses Bitcoin's history and where it all started from. And it certainly isn't new in the sense that it all of a sudden was there and it hadn't been thought of before. Back in the 1990s, there was a lot around distributed computing, cryptography, and peer-to-peer networks. And this all started to come together when Satoshi Nakamoto in 2009 pulled together all of those previous years of thinking around cryptocurrencies, around cryptography mainly, and distributed computing networks over peer-to-peer. There were plenty of examples of e-cash, digital gold, the digital dollar, and examples of a digital payment system that tried to get off the ground but never did in the 80s and the 90s. It was only when we got to 2009 that Satoshi Nakamoto created Bitcoin with his seminal white paper, which was called Bitcoin, a peer-to-peer electronic cash system. And it really was a response to the bank's ability to print money, which he thought caused inequalities and market cycles. And we kind of see this in the 1930s depression. We see this in the 1980s boom, the dot-com bubble, and the financial crisis in 2008, and now during the COVID crisis. In these times of crisis, the banks and the central banks only have a few arrows in their quiver, whether it's to lower interest rates or print more money. And what they've done recently is, because interest rates have been so low, they've had to resort to printing money. And this causes massive inequality within society, because where does the money flow? You might see the stock market at the moment at an all-time high. Considering the reality that we're facing, with many people out of jobs and many businesses faltering, really the stock market is not conducive of what is happening in reality. And all the money printing really does tend to go to stocks and bonds and ways of propping up the traditional financial industry. Now, Satoshi Nakamoto understood this, and that's why he started thinking about how best to create a money system that was not governed by banks, that couldn't be confiscated, that couldn't be taken away by banks. We talked about all different types of money, and gold during the World War II was confiscated by the Germans. In 1930s, the US said that nobody was allowed to own gold. And so what happened is they offered gold at a certain set rate and got everybody to sell their gold back to the government. And then once that was completed, the government then raised the gold price. So there is an inherent inequality when you have central authorities printing money and it not going to the people that actually need it. And this is what Satoshi Nakamoto saw. So who is Satoshi Nakamoto? Well, to be fair, nobody actually knows. He was very privacy conscious. He kept his anonymity high and only conversed on various different forums, and kept his identity really separate from his work. He also disappeared after a few years and handed over the reins of Bitcoin to other people within the industry. But really, to hit home about why Satoshi Nakamoto set up Bitcoin is really summed up in the Times from the 3rd of January 2009, where you saw on the front page that it was Chancellor on brink of second bailout for banks. And Satoshi Nakamoto, in the first ever block of Bitcoin, had a link to this very newspaper and the title of it. And that anybody can see within the Bitcoin blockchain. So then we move through various different transitions. That's the origin of how Bitcoin started, but we really quickly move from 2011 to 2012 as a deployment of cryptocurrency as an application related to cash. And this was more around the Silk Road. And the Silk Road was an online dark web store that sold anything from drugs to guns. And some people managed to hire, guns for hire and murders for hire. And whilst there are plenty of dark markets around, which were taking a big look at from the FBI, it still showed that Bitcoin actually was a use case. It could be used as cash. Then it kind of evolved more into kind of currency transfer and digital payments, and we started to see payments going across geographical boundaries. In 2013, 2014, we started moving into the contracts phase, and then where a very interesting guy called Vitalik Buterin took Bitcoin, it is open source after all, and added a layer of contracts or smart contracts, which is just executable code over the top, and rolled out his cryptocurrency called Ethereum. So this was the advent of smart contracts, where you could actually use executable automated code to perform business logic and business process. Then we got onto kind of the application stage, where we had all of these concepts in cryptocurrency as to what they could mean, what they could do, the use cases they could help with. And we had this massive hype cycle. Everyone had these very large concepts and lots of developments. And we saw this massive rise up in price to about $20,000 a Bitcoin. but then it fell heavily. And it fell heavily because there was too much speculation. People didn't realize how to value Bitcoin or what it was generally going to be used for in the future. We saw many ICOs, which are initial coin offerings, get off the ground in this period, 2017 to 2018. Initial coin offerings was just tokens, based on a blockchain. So you could take the Bitcoin blockchain as open source. You could change a few parameters, and there you go. You have a new cryptocurrency that you could sell, and ICOs were really a way of raising capital for various different projects. And then we move on really to today, which is moving from the infrastructure side and really the building side. And we see a lot more interest in the cryptocurrency area, especially the decentralized finance space. So I'm going to pause here just briefly. I know there's a lot that I've covered, but I wondered if there are any questions, or if anybody would like to ask any questions on some of the slides I've already shown. So we've got one question: is inflation necessary a bad thing? Does it not have a useful function as well? Well, yes, it does. So, but it's a very careful medium that you've got to manage in inflation. Inflation is a way that you get people spending their money, because if your money is being inflated away, it's better to spend it now than it is in a few years' time when it's lost its value. And so inflation is actually a way of getting people to spend money within the economy. So it's an economy built on debt and inflation. Bitcoin is very different to that. And because it's a scarce digital asset with only 21 million Bitcoins ever to be produced, it's actually a deflationary asset. And so possibly if we build a world on Bitcoin, we're building a world on savings rather than debt and inflation. Any other questions? Don't feel free to open up your mics. Please do pile in if you do have any questions. If not, I will carry on. So we mentioned Bitcoin's history, and I've mentioned the US dollar a fair amount. And the reason I mention the US dollar is because really it is now the global standard for currency around the world. But we only have to look at what the Fed is currently doing at the moment. And since 2008 and the financial crisis, they have been printing money into the economy. First purchasing securities, then treasury securities, then mortgage-backed securities. And you can see underneath the S&P 500 index, the printing just affects the actual stock market. And you can see in those phases where they're printing the money, it actually affects the stock market positively. And you can see when the Federal Reserve's assets go down, it does affect the stock market considerably. And now they're printing trillions. So the Fed have actually doubled their bank sheet in about 3 months. Their balance sheet was about 4 trillion, and they basically printed another 6 trillion during the COVID crisis. So what do you think is going to happen to the stock market? And what do you think is going to happen to inequality? Who is going to be getting all of this printed money? Because 1,200 for each US individual during COVID times might not cut it when you're actually printing so much money. And there are other things to kind of highlight. There are a lot of people that are saying, why are we paying taxes numerous times if you have central banks just being able to print money? And really, COVID, in some ways, is really showing the crony side of the financial industry as we know it. So another question has come in. Did people make a good investment when Bitcoin first came out? Yes, they did. But you've got to remember that, Bitcoin in its early stages, nobody thought it would ever exist. Nobody thought it would ever be around. They thought that banks and governments would squash it, because of course they would. You know, it's really in retaliation to their own fiat currency that they can control. And so they thought that it would be regulated out of existence. They thought that it might have massive bugs. You know, in those times, it was magic internet money. And so therefore, a lot of people in the early stages did not understand, you know, what Bitcoin could become. And so therefore, a lot of people sold in the early stages when there was a dump, only to realize that it was picked up again. There are very few people that, you know, saw it raised to you know, £100. It's about 100. Let's go with dollars. So $100 in about 2011, only to crash to about $10. And then it went up to about $1,000 and crashed back to 200. And then it went to 3,000, crashed back to 1,000, and then 5,000, back to 3,000. So it kind of yo-yos. And very few people bought it at the beginning and held on to it through thick and thin. You know, when you have 50% correction in the actual price, you start to get scared. And you realize how volatile this is, because at the moment, no one knows the value of Bitcoin and what it could represent. People are speculating at the moment, but it isn't a proven global system just yet, even though everybody can use it around the world, no matter who you are. You can be part of the Bitcoin network. So there's another question here. I said that we're losing trust in currency. This is based on some degree to Nixon's order in the year 1971. Yes, it is. There are publications in newspapers that some big countries are gradually organizing one-to-one transactions using their own currencies. For instance, China. Yeah, that's correct. And the Russian Federation. These transactions based on their own currencies are supported by their own gold reserves. Therefore, their economies less rely on dollars. It seems that this is the detection in the financial world for the future. What's my opinion? Yeah, so we are seeing Russia, China, and a lot of other countries hoard gold because they see something coming down the path, and they see that possibly the US dollar is not going to be the future world global currency of the future, especially considering you're printing it ad infinitum and you're eventually going to inflate it beyond any recognizable commodity or any recognizable asset. So yes, Russia and China are hoarding gold, and they are going to use it to back up their own digital cryptocurrencies. But it's not necessarily a cryptocurrency. We will talk about CBDCs in a minute, which is central bank digital currencies. But still, central bank digital currencies are centralized. You know, whether they will be able to prove their gold reserves, I very much doubt. They will open up their books. Whether they have enough gold to cover their reserves, you know, what percentage of gold do they have compared with how much they're going to print their digital cryptocurrency or, you know, digital currency. So there's still a lot of questions as to whether you can fully back your own digital currency with gold. At least maybe a percentage of your assets might be covered by gold, but certainly not all of them. Could you potentially not work ever again if you made a good investment? Yes, you can, and people have. So there are a lot of people in the crypto world, mostly by luck, I would say, but mostly because they saw some cryptocurrencies at the early stages, got in, managed to have this massive hype cycle and speculative fervor, and actually come out with, you know, an incredible investment. And now they're just dedicating their lives to going around the world talking about Bitcoin and cryptocurrencies and preaching the good word. You know, if you believe Bitcoin is good for society, many people think that it's a con and Ponzi scheme. And considering it's been 11 years out there with no hacks, no downtime, or at least very little downtime, apart from maybe the first year, and the fact that it's had 9 million% return in its first decade, then You know, people, I tend to wonder why people still think it's a Ponzi scheme, especially considering it's had multiple bubbles and it's come through all of them. So yes, they've made very good investments and now can enjoy life, but that's rare. That's very rare, because you've got to hold these cryptocurrencies through the down times as well as the good times and really believe. And 99% of cryptocurrencies will fail. Let me repeat that again. 99% of cryptocurrencies will fail. If you have a look at the top 10 cryptocurrencies 5 years ago, it's nowhere close to the top 5 now. If you were to buy 5 years ago and hold on to some small cryptocurrencies, you'll find that your holding is worth fractions of a pence. It won't go to zero because somebody will always hold a version of it, but it will go close to zero. So you've really got to understand that Bitcoin is the cryptocurrency that is targeting the future money space, the future reserve space. It's a global payment system that could help central banks around the world. Other cryptocurrencies are for different use cases. You've got to do your own research. What's the next big investment that I could make a killing off? Anything to look out for? We might talk a little bit about that later on. We've got some kind of special slides where I am actually going to give you an affiliate link where you can get your own cryptocurrency, and you can actually get quite a lot. So hang on, and hopefully we'll be able to show that later on. So money created is debt. The created money directly or indirectly leads to value creation, government spending, indirect funding, profit-making enterprise. It's supposed to be paid back with interest. That interest represents the value creation or increase in GDP. How does a crypto token-based economy cater for this? Yeah, that's a very good question. I mean, it is created as debt, only to ensure that money is put into our financial system and grows our GDP. With a crypto-based token economy, unfortunately, a lot of that will still happen, because a lot of cryptocurrencies, not Bitcoin, but a lot of cryptocurrencies will continue to inflate their cryptocurrency. Will continue to maybe print more cryptocurrency, especially if it's centralized. The beauty of Bitcoin is that it was made in a time when nobody cared, and nobody thought to regulate it, and nobody thought that it was going to be useful, and it started to mature. And then when Satoshi Nakamoto stepped away and it was fully public and fully decentralized, where there was no current authority governing it, that is when it kind of really started to become kind of a new possibility for kind of a new cash system. So if we're in a token-based economy, there are going to be some tokens that are going to drive utility on various different blockchain platforms and different use cases. But if we were to build our token economy off Bitcoin, we're actually building a society on savings. And these savings will grow in time, and there are clever kind of financial instruments where you could put some of the savings away and generate a yield that can improve GDP. Yeah, so now in the cryptocurrency sector, and I'll show some of these later on, you can actually get 8 to 10% interest on various different cryptocurrencies, and you can get 5% interest on your Bitcoin, even without the value going up. There are some very interesting stuff coming out on the crypto side that allows you to lock that away, get a yield and dividend from it, and that will be put back into the economy. As we see more traditional finance flow into the cryptocurrency economy, it will ensure that we have people saving rather than always going into debt. Okay. Can I hold Bitcoin as a physical, tangible item? No, you can't. Not really. Do I have? Maybe I can't find it. I have a Bitcoin token, but it's a token. It's not a real Bitcoin. Bitcoins are all digital. They're all held in a digital wallet. And so, no, you can't hold it as anything physical and tangible. But then, Pokemon is not tangible, and in some respects, even the money that banks show in your little mobile app, that's intangible. That's just numbers on a screen. Yes, you can convert that to actual hard cash, but that's still numbers on a screen. And as we move more to a digital world, I think people will accept Bitcoin as more of a digital payments facility than usual. And is this a good thing if central banks move into the cryptocurrency business? Well, they kind of are, but in a way that is centralized, and they are producing their own digital currencies because they, China came out and said they are producing their digital currency for 4 reasons. The first reason is they saw that in WeChat and Alipay, that the payment mechanism, let me get that right, in there was being used across the country. And so if they built a cryptocurrency kind of like the one within Alipay and WeChat, then they can go head to head and compete with it. But they also want to use it as programmable money. So they want to ensure that they are banking the unbanked. So all the people in China that do not have bank accounts, they bank those. But the last point, the fourth reason why they're creating it, is probably the most telling. And that is because they want to get off the US hegemony of the US dollar. Okay, so they want to go head to head with the US dollar as the global standard for money. And that is why they are pushing forward with their coin. You can also realize that, it will be highly surveilled, and any kind of digital central bank digital currency will be, you will give up some of your privacy to actually play in that area. You can imagine that you would like to send a charity donation to your favorite Afghanistan charity. And is the Bank of England going to allow you to do that? I very much doubt it, especially when we look at various different countries that have sanctions on them. Are you actually going to be able to send money to those countries? Probably not. There's a number of other factors as well, but yeah, it's quite a deep rabbit hole to go down. Would you explain Bitcoin to a 10-year-old? I feel that I need some level of explanation still. Okay, so money helps you buy goods and services, and it's in the form of coins. But the people who actually get to decide the value of that money is a big unelected group of people that are part of the central bank. Bitcoin is the people's money. It's actually governed by everybody that participates in the Bitcoin network. So it's global public money as opposed to government centralized money. And that's probably how I'd explain it. And maybe a 10-year-old might not get it too much, but maybe you could explain it in the form of digital items in games. Yeah, so there's a massive market for digital items in games, and cryptocurrency can actually have smart contracts running on it that represents those digital items. So now you can't transfer digital items in games from one game to another. But with Bitcoin and cryptocurrencies, you can, because they have inherent value outside of the game. So therefore, you can use them outside of the game. And maybe that's another way that you could actually describe. But there's lots of resources on Bitcoin. I'm going to highlight a few later on in the presentation. But maybe we should kind of make a move on. There's a few more slides to get through. But good questions. Thank you very much. And hope kind of my explanation kind of helps. We won't go into too much detail about how the Bitcoin blockchain works. It's all about, it's called a blockchain because they store the transactions in a block, and then they link them cryptographically to each other. So it's public, it's open, and everybody can see it. And so therefore, if anybody plays outside of the rules, they're not allowed to participate in the network. So everybody benefits from playing by the rules. A little bit of analysis around Bitcoin. Yes, it can be transferred peer-to-peer. Is it central bank issued? No, it's created by mining. We'll go into that in a little bit. Is it electronic? Yes. Is it universally accessible? Yes. But when it comes to corporate coins, Libra is a good example of one. So this is Facebook's Libra coin, which is mobile. It should be stable against a basket of currencies. It's fast. It's for the world. It's scalable, and it's secure. That's what Facebook have kind of marketed as their own step into the cryptocurrency space. But when we look at Libra, we kind of class it as a wholesale cryptocurrency. So can it be transferred directly? Yes. Is it central bank issued? No, it's actually issued by Libra. And so therefore it's Facebook actually minting these coins themselves. Is it electronic? Well, absolutely. Is it universally acceptable? Well, no, not at this stage. Libra is permissioned. So you've got to get permission to actually be a part of it. And do you think Facebook is going to allow you to send your donation in Libra to Afghanistan or some Middle East country? Again, it's going to be highly surveilled, and they're going to know far more about you together with your Facebook profile. So what we have is we have public currency or public money, which is Bitcoin. We have corporate money, which is like Libra, and we have government coin, which is a bit like the CBDCs. So let's move on to a little bit more about kind of cryptocurrencies. Here are some key players in the market that are really useful to know. We've talked about Satoshi Nakamoto as an individual who kept his privacy well hidden. There are people that think that we might know his identity, but the mystique kind of helps Bitcoin anyway. And it also helps Bitcoin be a decentralized network. The Winklevoss twins, you might notice that I've got a picture of Tyler Winklevoss twice. I couldn't find a picture of his brother, but they are making storms in the cryptocurrency space by setting up the Gemini exchange in the US, one of the very few exchanges which is regulated by the US. Don and Alex Tapscott have written multiple books on blockchain. Elizabeth Stark is a fantastic lady who's building second layer protocols over the top of Bitcoin. Now, what I mean by that is that Bitcoin is the bottom layer. And really, you could think of gold as a bottom layer of money currently. You know, gold was difficult to transport, and so therefore you needed paper and coins to represent the gold. After the paper and the coins, becomes, the internet and the money, how the money is moved through the internet through various different levels until it gets to MasterCard and Visa. And MasterCard and Visa are really playing on kind of level 7 protocols above the base layer of gold. And it's kind of similar with Bitcoin. Bitcoin is its own kind of foundational protocol, and there are other various different levels going up to eventually, hopefully, MasterCard and Visa accepting crypto and paying in crypto. But there are many levels to go, and Elizabeth Stark is part of the Lightning Network, which is a very fast payments second layer over the top of Bitcoin, because Bitcoin can be slow if there's lots of people transacting on it. Ivan on Tech is Andreas Antonopoulos, Simon Dixon, and Anthony Pompliano, the 4 in the bottom left, are fantastic educators in this space. Yeah, so go to YouTube, type them into Google, Ivan on Tech, Andreas Antonopoulos, Simon Dixon, Anthony Pompliano. They all give different viewpoints of the sector. Ivan on Tech is very much programming and has an academy that allows you to learn more about the cryptocurrency sector. CubeRoot 64 has an affiliate program with Ivan on Tech. So if you go to cuberoot64/resources, you will find access to Ivan on Tech's Academy, where he has about 25 massive learning themes, everything from Bitcoin 101 to decentralized finance, which is a very brand new space. Andreas Antonopoulos is a fantastic mind that has extolled the virtues of Bitcoin over the last 10 years and talks about why it can be used as a new monetary payment system. Simon Dixon has kind of financed a huge number of cryptocurrency firms in the space after realizing very early on in 2011 that Bitcoin was a solution to inequality, like Satoshi Nakamoto, and all of this kind of pumps and dumps, or kind of the swings that we have in the current financial industry. So those are 4 people to really go and have a look at what they're talking about. Roger Ver was an early Bitcoin proponent, but now created his own cryptocurrency called Bitcoin Cash, which is not Bitcoin. Yeah, do not go to bitcoin.org, buy Bitcoin Cash thinking it's Bitcoin. It's very different. And unfortunately, Roger believes that it is the real Bitcoin, but it's not true. Tim Draper, when Silk Road got taken down by the FBI, Tim Draper picked up hundreds and hundreds of Bitcoins and has since financed a very good hedge fund with it. Vitalik Buterin made Ethereum, which is the 2nd largest cryptocurrency, and Nick Szabo is the first person to come up with the idea of smart contracts, which we all use in the industry today. Should you get into mining? Well, that QR code that you see on the screen is for NiceHash. And NiceHash is just a simple program that runs on your computer, and with a graphics card or a CPU, you can mine Bitcoin. So if you did want to mine, this is the program that I use. So hold your phones up to the screen and go where that URL takes you, that QR code URL, and you will actually get onto NiceHash, where you can set yourself up an account. However, there are some things to keep in mind when it comes to mining. It used to be profitable. It is no longer profitable unless, like myself, you've got solar panels and I've got a computer down here that's got a couple of graphics card in. So I do mining occasionally, especially when it's sunny, but the electricity needed for a home use mining rig is frankly doesn't make the return on investment. So you can see I did set up a rig back in the days with 5 graphics cards. This was an Ethereum miner. But the money we spent on graphics cards and energy really did not make it useful at all for return on investment. But you live, you learn, and NiceHash is a program that I use and is pretty good just to use if you've got spare CPU cycles. So you can use that. Beware of cloud mining contracts. They tend to be expensive and they tend to not give you the return on value. So be very aware of them. And when people think that mining is mainly centralized in China, they're wrong. There are a lot of miners in China, but they create mining pools, and everybody around the world can be part of the mining pools. So at any moment, I could actually remove myself from a Chinese mining pool and go into a US or a Norwegian mining pool. So it doesn't mean that mining is centralized. Okay. Bitcoins, altcoins, and shitcoins. Well, there's nearly 6,000 cryptocurrencies on CoinMarketCap. We might take a look at some of those later on. And there's many layers of technology to understand with all of these cryptocurrencies. You've got to research what the cryptocurrency is, what the team are doing. Have they hit their roadmap? Is it likely to gain market adoption? And I would say again, 99% of cryptocurrencies will not. I do not invest in anything that I do not understand. And you really got to understand what these cryptocurrencies are actually trying to do for the industry. There are many that promise the earth, but do not have any adoption or have massive security holes that nobody knows about except for people within the industry. So do your own research and do not invest in something you do not understand. So if it's public, cryptocurrencies secure the value of that blockchain, like Bitcoin and Ethereum. But most cryptocurrencies don't survive 5 years. I think Bitcoin and Ethereum are the longest running, especially Bitcoin, of course. Maybe a couple of others like Litecoin and Monero, but very few kind of last. And when you're investing in various other cryptocurrencies, don't forget to look at the Bitcoin comparative, which means that, yeah, your shitcoin or your altcoin has gone up in price, but has it gone up more in price than Bitcoin? Well, when you have many institutions and hedge funds looking at Bitcoin as a non-correlated asset with massive asymmetrical side risk, massive asymmetrical kind of investment risk, which means that you can actually make way more on the upside than you can on the downside, then you actually see that, yeah, this can be important. It's still highly speculative, and they are it's quite highly unregulated. There are starting to be some regulations coming from the SEC in the US, leading the way, and other geographical areas. But governments can't actually decide whether this is a commodity, whether this is a currency, or whether this yeah, commodity, currency, or yeah, anything else. And you're finding that some cryptocurrencies start off as a security and then move more to a kind of a commodity-based network. And so regulators are really scratching their heads as to how best they regulate this. You know, Ethereum is a prime example of they went through an ICO, raised lots of money. It could be counted as a security, but as the network grew and became more decentralized, the US government has now said that it's not a security, it's now a commodity, and so therefore it's not going to be under the same purview. Only a small fraction of the world's population own any cryptocurrency, so don't worry, you're not late to the party. If there is a party, if you're careful. We're still in very early stages, but we do have some issues in the space, especially around education, which is one of the reasons why I am giving this talk. Adoption, we need more people using it and building on it. Scalability, when there's a lot of people using Bitcoin, because Bitcoin is rather slow, secure, but slow, then we do have various different scalability issues, and sometimes transactions are quite costly to put into the next block. And we do have tribalisms and scams. You know, my coin is better than your coin. Really? You're a scammer, etc., etc. We'll talk a little bit about that in a bit. So you can have coins and you can have tokens. Coins tend to come with their own blockchain underpinning it, and tokens tend to run over the top of other coins, is probably the easiest explanation of that. So Bitcoin, Ethereum, Litecoin, Monero are definitely coins, but anything that runs over the top of it, there's plenty down the list of cryptocurrencies that don't have their own blockchain infrastructure. They just run on somebody else's, mostly Ethereum. So token uses. Well, you can use tokens for a number of different ways. Normally they call them ICOs, initial coin offerings, or token sales. You know, they can be a medium of exchange, the new currency. They can provide utility or access. They can be used to raise funds, reward actions on the platform, create unique assets. You know, like non-fungible tokens. CryptoKitties is a good example of that, where, yes, you read that right, CryptoKitties. It was little images of kitties where, you know, the actual transaction details affected how they looked. And so you could interbreed them with two transactions and make a new CryptoKitty. Yes. Now, what happened there was that it was so successful that it stopped the Ethereum network from running for a little bit, or at least it slowed down to such an extent that we had very high prices for transactions. And then tokenized assets, which are digital versions of physical assets like gold, property, and stuff like that. But be careful when you know, there was this massive run up in 2017 with ICOs and token sales, and really the white papers that came out, oh, they looked fantastic. They promised the earth. But when we actually got to production and seeing actually what's being built, it looked a little bit dodgy. And then when we actually got to the final product, most ICOs rolled out some utter rubbish. And so that is always something to be aware of. Wallets. This is how you store your cryptocurrency. You can see here in the middle of the screen, this is what a typical kind of transaction would probably look like. So you can select Bitcoin and receive it in a certain wallet. How much Bitcoin? Yes, you can buy percentages of Bitcoin. You do not have to buy a whole Bitcoin. You can buy 0.00001 of a Bitcoin. Each Bitcoin is split up into 100 million Satoshis. So that's 100 million Satoshis. And so you can send Satoshis across this global payments network. And you can see here that the address is just a mix of numbers and letters. And that is your unique address for that wallet to receive Bitcoin. Do not send Bitcoin to a Bitcoin Cash wallet. Do not send Bitcoin to any other cryptocurrency wallet. You will lose it. So you've got to make sure that you're sending Bitcoin to a Bitcoin wallet. So there are kind of a long string of characters. You've got your public key, which you can think about as your account number, which is the address that you see on the screen here. And you've got your private key, which is more like your account password. Now, be careful with your account password because it allows anybody to access your account. Yeah, so you do not ever give up your private key. If anybody asks you for your private key, they're stealing money from you. So just be careful. There are online wallets like Coinbase, Binance, and Celsius. Those are the ones that I use and recommend. There are desktop wallets, Electrum and Wasabi. There are browser extensions, MetaMask. So this runs in Chrome and allows you to connect to the Ethereum blockchain. There are mobile wallets like blockchain.com. Here's the logo. Here's a view of what the blockchain.com wallet would look like. Crypto.com or Trust Wallet are both good wallets as well, and ones that I use. Paper wallets, you can see paper wallets here, but be careful because they print your public and private key on the wallet. Yeah, so you don't particularly want to show it on webcam and have someone take a picture and then drain all your funds. But where you should really keep all your crypto is on a hardware wallet. And this is a Trezor, this is a Ledger Nano, and these are air gaps, kind of USB sticks in a way, that make sure that you keep your private key private and nobody can steal your funds. So here's some of the lingo that we use in the industry and people kind of use. It's quite funny to hear some of these. And so FUD is a fear, uncertainty, and doubt, mainly from the banks and the financial sector. They do not like what the cryptocurrency market is doing currently. Fear of missing out, to the moon. Everyone wants to go to the moon with Bitcoin, but some people laugh and say Bitcoin's not a get-rich-quick scheme. It's a get-rich-slowly scheme. So, I mean, if you can ride out the volatility, and if Bitcoin fulfills its promise as a new payments network that is run by the public and not corporations or individual governments, then just holding on or hodling on to your Bitcoin is probably the best way to grow your investment. Wrecked is when a currency goes down, and bonds. There's a lot of people that do trading and maybe leverage up on various different exchanges, and they definitely get wrecked if the market goes against them. Shilling is talking up a particular currency without disclosing ownership. Of course, I own a lot of these different cryptocurrencies, or not a lot, but a little bit. So take everything that I say with a pinch of salt. I'm only a guy on an online talk. You don't know me from Adam, so just be careful and do your own research. And you have others in there, and you can see I've put a couple of kind of funny clips and memes in, because the cryptocurrency industry is full of memes, and that is really what gets people interested. Common mistakes to avoid. You just got to be careful with your security, and you get to learn a lot about security in this industry. Don't send your tokens or coins to the wrong address. I've mentioned that already. Turning on two-factor authentication. This is by far the most important. And as you can see here, we've got Google Authenticator. It shows a number, and whenever you go to the website, you've got to type in that number through that app to get in, and that kind of helps with security. You can have other things like whitelists, blacklists, etc. for added security, or kind of delays on when you can transfer cryptocurrency. So you can actually tell the exchange, put a 2-day delay on. Okay, so if you don't want to move anything and you're hodling your stash, then you can just keep it on the exchange, and it won't be able to be transferred away. Do not share your private key. Do not believe in free money or the next hot altcoin or investment. Do research, learn, invest in yourself, invest in education. This is a fascinating area, and when we think about digital natives and the future and the millennials and children growing up, do you really think they're going to start buying stocks and bonds? I very much doubt it. I think they're all going to go towards cryptocurrency. This is very much the future of digital payments in any shape or form, but you've got to do the research and understand this area. SIM swapping is important when you have your mobile wallets and you don't have two-factor authentication turned on. There have been some SIM swaps that have managed to get hold of people's funds, people using stupid passwords, of course, social engineering and phishing, but do research the team. Here you can see Kevin Ballinger. Really? He was part of an ICO in South Korea, and he looks very much like Ryan Gosling, and he is. So they just taken a picture of a Hollywood A-star and said, oh, yeah, he's our experienced graphic designer. Yeah, for those who do not know who Ryan Gosling is, they might be duped. At least here in the West, we actually watch his fantastic films. We mentioned some of this, dodgy exchanges. Don't forget, not your keys, not your coins. Right, so here we now get on to some giveaways. I use Coinbase and Binance, both very reputable exchanges. Kraken and Gemini are the Winklevoss twins in the US. Kraken, a very, very useful exchange. All of these exchanges are very reputable and have been around for a long time. Now, do not trust every exchange, and do not trust new exchanges or those that have very low liquidity or very low kind of market cap or kind of the amount of transactions going through them. But for Coinbase and Binance, they're pretty good. Binance is more around altcoins and shitcoins. If you do want to get into that investment side, but again, be very careful. With traditional investors and big companies and corporations getting interested in Bitcoin, it tends to be Bitcoin dragging up the rest of the altcoins. So feel free to put your mobile up against the screen, open your browser or Google Lens or whatever it is. If you click on the Coinbase link, it's my referral link. So we will both get £10 of free Bitcoin, or is it $10? I think it's $10 of free Bitcoin. Yeah, so if you go to Coinbase, you'll get $10 of free Bitcoin. And that is one of the better platforms to link your bank account to and to start moving from fiat currency into Bitcoin or Bitcoin back into fiat currency. But considering that Bitcoin is considered by some as some of the hardest currency, hardest money known to man, then a lot of people, once they get into Bitcoin, don't ever think of going back to fiat and back to traditional currency. Binance kind of offers 5% commission back. So if you do want to trade altcoins, use that link and you can get 5% commission back on your trades. Okay, but I've got even something even more better for you. So the next slide is a couple of things that I actually use, and I find them really, really interesting uses of in the cryptocurrency industry. So Celsius is an app that allows $10 of free Bitcoin. So if you use that QR code, hold your mobile up to that QR code and go through and create yourself an account with that affiliate link, you'll get $10 of free Bitcoin, but you will be able to put your Bitcoin to use and gain a 4.5% yield on it just by leaving it in the app. Now, I've known Celsius for a long time. They started up in 2015, 2016. I've actually know the CEO, bumped into him a few times, and his business model in Celsius is unbelievable. He has basically created a non-fractional reserve bank. And what I mean by that is that he holds more reserves than he has money in. So let's say you put £100 in, Celsius takes that £100, but only kind of lends out a percentage of that to various different markets, and only lends out up to that £100. They will not lend out more. Now, traditional banks will tend to leverage your £100 and end up lending out £1,000 based on that £100, because not everybody in the banking industry is going to want their money back straight away, and so they leverage up. Celsius does not do that, and they give 80% of all profits in the form of interest back to their users. And so if you wanted to store your crypto on an exchange or in an app, Celsius is a pretty good one. You can even store USD stablecoins, and soon there'll be British pounds that you can store on Celsius at 8% interest. Where can you find 8% interest? Every single day, I get another letter through from my bank account saying, we've just reduced your interest rate. You're now paying not 0.1%, but 0.001%. Happy days. It's ridiculous, because banks currently do not have liquidity. They're facing a solvency crisis. They're trying to make as much money as possible. Celsius has turned that on their head and is now offering 80% of all profit back to the users. It's highly transparent, and I definitely use them for a portion of my Bitcoin. Now, I say a portion. I don't trust my Bitcoin on all of these platforms. A lot of the Bitcoin that I have is in a hardware wallet, which is stored up there somewhere. Here we go. There we go. There's my Ledger Nano hardware wallet. But the password to that is distributed. So even if you were to get hold of that, you will still not be able to get into my Bitcoin. And if I was to get another Ledger Nano hardware wallet and put in my seed phrase, which is my private key, which I would never give to anybody, then my Bitcoins are still there. Now, crypto.com is a very interesting one at the moment. They are actually offering Visa debit cards. So this is a Visa debit card built on a crypto platform. And crypto.com have really come into the industry in quite some fanfare and marketing. And they've got a fantastic exchange and wallet. And if you use that link, my affiliate link here, that crypto.com link, you can get £50 in crypto. Now, there is the native crypto or crypto.com, which is not Bitcoin. You make your own decisions as to whether, the crypto that they give you is worthwhile, useful. Is it going to go up in price compared with Bitcoin? Does it serve a utility for the platform? My personal belief is that it does. And I get, with this card on crypto.com, I get about 2.5% cash back in crypto, no matter what I am purchasing, whether it's online or whether it's out there. There's another one as well called WireX. I've got a WireX card here as well. Now, WireX gives you Bitcoin back. So WireX, but you can only use it externally. You can't use it online. So you've only got to use it kind of tap and pay, or kind of, buying a car or something. But you can get kind of Bitcoin back. So you're starting to see some really interesting things come out of the cryptocurrency industry as far as adoption and links to traditional finance. You can load these cards up with your bank account debit card, costs you nothing. It's just moving £100 onto the card, and then whatever you pay with, you get crypto back. So that's crypto.com. So you can make, again, 4.5% on BTC, and their token called Crow, actually they're doing this crazy offer of 20%. So you can make 20% yield on your Crow, but you've got to lock it up. And the reason that crypto.com have done this is so that they can actually get their cryptocurrency out there, and it's not a security, because they're not promising any investment, they're not promising price goes up, but they're just kind of saying, well, if you wanted to stake it, we'll give you some more. Yeah, so it's a way of getting their coin out there without going over those regulatory hurdles of being a security. So 2% cash back, 4.5% on BTC, and 20% on their native token. But be very careful within their app. There's a number of cryptocurrencies. Don't buy all of them, and beware that both Celsius and Crypto.com are what we call custodians. So they hold your private keys for you. So a bit like a bank. A bank holds your money for you. Yeah, it's not your money until you want to take it out. Just look at Lebanon at the moment, where the banks aren't even allowing the Lebanese to take their money out of their own bank account. The Turkish, the Zimbabweans, the Venezuelans, the Argentinians, they're all having massive banking problems and not being able to get their own money out of their own bank. And when they can, it's now half the price it was because of massive hyperinflation. And what does the government do? They say that Bitcoin is criminal. It's a Ponzi. It will go to zero, and you can be put in jail if you use Bitcoin. And in fact, India, they flip-flop on whether cryptocurrency can be used or whether you go to jail to use cryptocurrency in India. So there is a massive kind of fight between this new decentralized finance world, which is global and for the public, and government world that is just printing millions of dollars. Anyway, I hope you can use those affiliate links. We're just going to kind of pretty much finish up here now. Thanks for bearing with me. I think we've kind of run over a little bit on time, but thanks for those that have continued on. I hope you can make use of those links. Let's kind of just wrap this really all up. Is cryptocurrency the future of money? Well, let's have a look at some of the information out there. There is currently parabolic growth in interest in cryptocurrencies. You're starting to see a lot of hedge funds talk about it. There's a big hedge fund managed by Paul Tudor Jones in the US, which is highly respected, and they've now got 2% of their worth in Bitcoin. It's basically like saying, okay, if you put 500 into Bitcoin now, and Bitcoin goes to zero, you've lost £500. Fair enough. It might ruin your day, but it's certainly not going to ruin your life, and it's certainly not going to affect your overall investment strategy. But what if Bitcoin can be our next global payment system, because we see fiat printing going off the charts and this solvency crisis coming along with our central banks? So if it is, there's massive upside. Yeah, so for a little downside, but possibly massive upside. And why wouldn't you want to put into your portfolio or your investment strategy just a small percentage, because it is a non-correlated asset? I see another question come in. I will answer questions at the end of this slide, sure. So there are a lot of traditional investors looking for yield, and they're currently in the stock market because there's a lot of money being propped up in the stock market. The central banks are printing money and it's going to the stock market, so people are in there. But a lot of people are saying, if it wasn't for the stock market, where do I find yield? We're starting to go into negative interest rates in some European countries. Now, all of our banks are giving us 0.01% interest. Where is the yield? How do I make my money? Is it in gold? Well, there's not enough gold to go around, and it's really difficult to actually buy gold at the moment because you've got to go through so many hoops and investor KYC and AML. So a lot of people are starting to look at cryptocurrencies. And let's take the cryptocurrency market as a viewpoint. It's currently worth 270 billion in total. That's Bitcoin and all of the others. Amazon is worth 1.2 trillion. All the gold in the world is worth 8 trillion. And even Bitcoin is trying to become that new digital gold. So at 8 trillion, could Bitcoin take a small percentage of that, especially with the new generation coming along and the millennials coming along? All stock markets are 73 trillion. Global debt is around 300 trillion. And derivatives are currently at 520 trillion. And what we're doing in the crypto industry and the blockchain space is looking at some of the new financial instruments that are coming out that can manage some of these derivatives, but in a digital fashion. So there's a lot of growth in the digital payments area, but you have to be careful. You know, they're really affecting the embedded financial traditions that we currently see in the market. Transparency of distribution, there's far more transparency in the Bitcoin network. And whilst people think it's a Ponzi and a scheme for drug dealers, people have been caught by, stealing Bitcoin. You know, the US have got all the authorities to clamp down on it, and they can trace it. It's a public ledger. It's a public ledger out there. So you can actually track those transactions. We can offer 10% interest rates in crypto. We can offer fast, efficient reconciliation. Now, I don't know if you know, but if you send £30 across the world, maybe that person will get it in maybe 2-3 days. You know, if you're doing it at the weekend, of course, banks are closed. You know, you can't do it at the weekend. And, you know, it might take a few days. Oh, it'll also cost you 30 quid to actually send it. And you can't send it to any kind of Middle Eastern country. So, you know, the movement of money has been stopped by regulation and sanctions and others. Bitcoin allows, anybody to participate. And it represents a transfer of value, not just money. And it really does feel like we are at the start of something special like the internet. You know, when it was TCP/IP and everyone said, you know, what good is that? How is it going to run my video? So we are in a very interesting time. And no matter what the situation you're in, realize that you're in the most interesting time in money and finance. And that's by Simon Dixon, one of the biggest OGs in the space, the original gangsters in this space, who's been here for at least the last 10 years. Hal Finney, whom some may think could be Satoshi, in 2009 wrote, "I see Bitcoin as ultimately becoming a reserve currency for banks, playing much the same role as gold did in the early days of banking. Banks could issue digital cash with greater anonymity and lighter weight, more efficient transactions." And then lastly, Rick said Bitcoin will do to banks what email did to the postal industry. And I somewhat believe that. So maybe it is the future of money, and maybe you should consider some education in this area. And for more information, you can either reach me at these addresses and these Twitter feeds, or I've got more information on my own personal website at antparker.com/Bitcoin. That has the links to some of the stuff I've shown and my journey over the past few years in buying Bitcoin and, you know, what I found. There's going to be more information coming to that. And cuberoot64.com/resources has a lot more resources around blockchain and what Bitcoin actually is. And it has a link to Ivan on Tech's Academy, where you can learn about all of this and really set yourself up for the future. So with that, I'm going to say thank you for bearing with me. Thank you very much. Hope you enjoy that. I'm going to move to the questions. Feel free to drop off if you wish. But if you have any questions, I will stay on for as long as questions are flowing. Right. What are some of the questions that have come in? Oh, I can think we have a few. Can you explain what a cold wallet and a hot wallet is? Okay, yes. A cold wallet is one that's not connected to the internet, and a hot wallet is one that is. Yeah, so if you've got money on an exchange, exchanges tend to use a hot wallet, which is where they do all of their transactions coming in and out, in and out, in and out. But they would reconcile their overall profits to a cold wallet, which is in deep storage and cannot be accessed through internet mechanisms. You have to kind of physically take something and place it. So a cold wallet is a better way to store your cryptocurrency with your private key. A hot wallet, you've got to trust the people that are holding it. Where can I hold a large amount of money that won't lose that much value? On a ledger or a Trezor. You know, a Bitcoin is really interesting because it is a scarce digital asset. when there is a demand for it, it doesn't affect the supply. Yeah. So if you think about gold, if the price was to rocket up, you'll realize that so many people come out of the woodwork and start mining gold because it's worthwhile. And so therefore, with all these new companies coming into the gold space to mine the much higher price of gold, that will help to bring the price down. Bitcoin doesn't have this because Bitcoin is a scarce resource. It only has 21 million. That's mathematically proven. You can see it in the code. And so when you have a big demand, it can't affect the supply. So in effect, it affects the price. So if you want to hold a large amount of money, which won't lose that much value, there's two ways of doing it. Either hold it in US dollars with 8 to 10% yield in some of these cryptocurrency custodians, or just hold Bitcoin in a cold wallet. And if you believe in some of the stuff that I've said on this call, and some of the beliefs that you have, then possibly Bitcoin will go up in price as the demand soars. And I am actually seeing in the industry a lot more corporations and institutions getting interested in Bitcoin, especially as a non-correlated asset to anything else in your portfolio. Would you say crypto trading is less riskful than real life asset trading? No, I think it's more riskful. I think it's more risky. And it's primarily more risky because you don't, there's a lot to understand. There's a lot of scams and people trying to con you out of your money because this is a brand new technology. And you don't have the safety net of the FCA or kind of, your asset trading business that has to abide by certain regulations. So I think it's more risky unless you just are buying Bitcoin, because I think the use case of Bitcoin, maybe even Ethereum, that's pretty much solid. But I would say it's pretty much risky if you're looking on Binance and dealing with all these altcoins. It could turn in a minute, and many people have got wrecked from doing that. So I would say it's more risky, but there is a flip side. Because it's more risky, there's possibly more upside. And if you have real life asset trading, because there's so much US dollar being printed, all the assets are kind of being devalued away from their asset value. And so possibly cryptocurrency is a better place to store your wealth these days than actual assets, especially when the stock market isn't in any shape or form along with reality and what we see with businesses today. So what's the safest long-term way to own cryptocurrencies? Again, buy on Coinbase. It's okay to link your bank account there, but it does take probably a few weeks to go through KYC and AML, which is know your customer, and AML, anti-money laundering. So those are the regulations that all institutions have to abide by to actually perform in the sector. So go on Coinbase, buy Bitcoin, and you can leave it on there, but you're still trusting Coinbase. Move it off to a hardware wallet where your private key, and just leave it. And that's how people get very, very wealthy, by realizing that they left 10 Bitcoin on an old ledger a few years ago. So that could be the way. What's the cheapest way to own? No, we've mentioned that one. Okay, so can you put Bitcoin money on a USB stick and put that somewhere safe? Yes. So that's what I meant about the Ledger Nano, which is this little small device here, and kind of comes in a box like this. Ledger Nano comes in a box like that. Do not buy these at car boots. Please do not buy these at car boots. Buy them through Ledger themselves, their direct website, because it has been known that car boot people, they open them up, they record the private key, which is kind of highlighted inside, and then they seal it back up again. Not good. So always buy from reputable sources, but that's the Ledger Nano S, which is useful to store all cryptocurrencies. When I've read in the past about people losing hard drives and subsequently a lot of Bitcoin, what is actually being lost in these cases? Are they losing their private key? Yes, they are. So they lose their private key, which means that they can't access the place on the Bitcoin blockchain that says that you control that Bitcoin. Yeah, so they basically lost access to it. So you can see your Bitcoin still in that wallet on the public website, on the public blockchain, but you just can't access it anymore. And this is what happened, we think, purposefully to Satoshi's 100,000 Bitcoin. He effectively burnt them by I think destroying the private key. So yeah, that is certainly one way. And yeah, we heard of some guy who was looking at in a dumpster because he had saved Bitcoin on his machine, and of course that was the private key that gave him access to it. What are the tax implications of owning cryptocurrencies? Yes, good question. It's different around the world. The US has it terribly because they have to record every single transaction that they do. In the UK, we've got it a little bit better. It's capital gains. So anything that you make. So you can kind of buy and sell cryptocurrencies throughout the course of a year, but you've got to record when you buy them and at what price, and when you sell them. And the difference of that is, of course, your profit, and that profit goes on top of your capital gains. Goes on top of your normal taxable allowance as capital gains, and so you would have to record that on your self-assessment tax form as profit. However, with a good tax attorney and tax accountant, you can actually take into losses that you've had in previous years through. So we did have this massive run up to 20,000, and it then crashed all the way down to the 3,000. Would you believe? But it's now nearly 10,000. Right, as someone who has invested quite a lot into cryptocurrencies, have you ever been tempted to cash in when the markets become volatile? Great question. You see, a lot of people do that, and it's human nature. When you don't understand something and you see the whole market crashing, you kind of realize, what am I missing here? What's happening? I better sell too. And that is how the majority of people do not last in this industry and think that crypto is a scam, because they buy high and they sell low. Since 2016, I've seen the price go up and absolutely crash. I've seen my 2,000 Bitcoin end up as 3,000 Bitcoin. It's not nice. And I was very tempted to sell. In fact, I ended up selling some of my Ethereum at the height of the market, which was useful, but only because my wife told me to. I wasn't too sure whether I should sell, but I didn't sell the Bitcoin. But you get used to these fluctuations when you have a new asset class, which people don't know how to value. Then you do get these massive wild fluctuations because we don't realize the full impact that Bitcoin might have on the rest of the world yet as a global reserve currency. It well could, in which case it will be worth much more than it is now. And so it will be highly volatile. And it's a highly volatile asset whilst people realize. I mean, and considering it's only 270 billion, and you've got companies that are 5-6 times the size of that in market cap, it's a small drop in the bucket. And so therefore, if you're a small drop in the bucket, any kind of movement really is exacerbated. And so as these markets grow, you'll have less volatility. But if you can hodl through the downturns, eventually you will actually come off pretty good as far as your investment is concerned. Could I email the presentation? Well, what I do as KeyBrute64, I have a Dropbox, shared Dropbox, and I will share, because it's a very large file, I will share it on my KeyBrute64 shared Dropbox and send the link out. So you will get a link to that, and you can download that and replay it. Please, could you share your cryptocurrency investment success story with us? Well, I'm not too sure it was much of a success in the first stages. because you know, I saw all these altcoins and thought, wow, this is amazing. I could actually buy a full altcoin for the price of 0.00001 Bitcoin. Of course, I'll buy the altcoin. But it works out that Bitcoin is the daddy and is the one that leads the market and pulls everything else up. Everything else needs a damn good use case to even be closely valuable to Bitcoin. And in fact, in the early stages, I actually linked my digital wallet to somebody else's wallet, thinking that I could pick up some extra cryptocurrency, and lost £600 worth of Ethereum. So that wasn't a good start. And then, you know, I invested a little bit more and saw the price go up, quite happy, sold a little bit, but a lot of my holdings went down with the rest of the market. And then I realized exactly what this thing is. And there are cycles to the market. Bitcoin has something called the halving, which yeah, is a whole nother rabbit hole to go down. But basically it means that the supply of Bitcoin is halved every 4 years. Which means that, you know, if you halve the supply, you double the demand, and you've got to really kind of halve the demand as well if prices were to keep equal. So you have this phenomena in the market as well, which kind of dictates kind of the swings. And so once I kind of understood that and understood maybe some of the deeper fundamentals of some of these shit coins that were indeed shit, and the altcoins that maybe did have a good runway and a good roadmap, I then started to be very much more sensible about how I deployed capital and how I invested into some of these cryptocurrencies. I am by no means a big whale hodler. I've just got a small percentage of my overall investments in Bitcoin, Ethereum, and a couple of others. And now I kind of sold the majority of all of my shitcoins because I don't particularly believe that they're going to get market adoption. I don't think they're hitting their roadmap. I think they have security issues, or maybe I just don't like the team. Okay. Now I think I've answered all the questions so far. Any other questions? Would anyone like to open up their mic and ask me a question direct? That's quite all right. Right. Do we have any further questions? Going, go on. Oh, maybe there's one more question coming through. Let's have a look. Andy is helping me with the questions. Thank you, Andy. Look if I can see. I can see a question. Do companies advertised as accepting Bitcoin actually have publicly verifiable Bitcoin transactions? Yes. Yes, they do. And that's the beauty of Bitcoin, especially when it comes to charity donations. And some charities are accepting Bitcoin. And you could actually track exactly where your Bitcoin is going. You can see the address it goes to, and then track exactly what happens within that address. Where does it go to then? And there are a lot of analytic tools online that you can use to actually track funds. And so, you know, this is a way that we can track transactions, but not necessarily know who the person is, because the only people that know who is behind that transaction are the exchanges that have taken your private information. Could I see a public address for bitcoin.org, the Bitcoin project, but no other charity, not even Wikipedia? Yeah, so just be careful with bitcoin.org. It is the Bitcoin, oh no, it's actually the real Bitcoin project. It's actually Bitcoin, proper Bitcoin. It's not bitcoin.com. Don't get the two confused. Bitcoin.com is offering Bitcoin Cash. Yeah, there should be a public address there, and more people are actually offering public addresses. The reason why we saw a whole lot of people offering public addresses and accepting donations, but then we saw so much fluctuation in the market that merchants, you know, couldn't balance their books and thought it was too volatile for them to accept. Especially when, you know, you buy $100 or you pay for $100 in Bitcoin, and then maybe the next moment it's down at $80. You know, you've just lost $20. So whilst it's volatile, merchants have been a little bit less inclined to accept it as payment, but a lot more businesses are now doing it. There's a lot of businesses online. So if you Google companies online that take Bitcoin, you'll see a whole raft of them. And you can even get Amazon vouchers. You can buy a car, you can buy property with Bitcoin. So there are plenty of places out there that you can spend your Bitcoin. Then again, if you wanted to spend your Bitcoin, you can always load it up on a card like this and spend it in any way you wish. But really, why would you want to spend Bitcoin when it's the hardest form of money you know, and you've got this trashy fiat money that you know is just going to be debased and inflated away over time and not have the same purchasing power. So there you go. All right, I think we have run out of questions. And probably run out of people who are still left. 28 of you still left. Thank you very much for joining. Hope you found that useful. Please do get in touch with me. You can go to angieparker.com/Bitcoin for some of those links to products that I use. Any other questions, do let me know. And I hope you found that of use. Back to you, Andy.
Thanks. Excuse me. Thanks for that. That's very interesting. I don't believe we've got any more questions now, so
I think we can just leave it there. Keep an eye on berkshire.bcs.org.uk websites for other events, especially online events. Good luck with any investments you make, but don't take my advice as investment. I'm just showing you the facts and what I believe in the industry. I'm not a financial advisor, so but good luck, and if you want to reach out, feel free. Goodbye, everybody.
thanks very much, and we'll close the call down now. Bye.
Thank you.